Gold is on the move, so it's time to see how much room there is to run higher. If you're new here, I'm Hema Reddy, and I use price, time, and momentum to boost my trading and that of my tribes. There's a lot going on here in the US and in the world recently, with the US jobs data that came out on Friday and the unfortunate breakout of war in Israel over the weekend. And let's look at how this is affecting a market that everyone around the world observes, right? Gold. So we're going to do that looking at the GLD ETF. And that is on a monthly chart to start. So you can see every candlestick here represents an entire month of action. I have my favorite momentum indicator, the RSI power zones, down below. Now, what I want you to notice here is that in this month, which obviously has not completed, right? We're just about a third of the way into August, or into October, actually. You can see that there is a support line, so a price floor that held back in February that is now also holding. We didn't break below. It came about 10 cents away before stabilizing. So that's really helpful because also the momentum indicator, again, on the monthly chart, which is not a complete bar, so just take it with a grain of salt, well, it's turning after testing the bull support power zone, which is an area of support in a bull market. And again, I get into the details of how I use the RSI power zones in my Winning RSI playbook, how to trade momentum on the side, and more. And you can check out the description for more on that if you haven't dug into it yet. All right, now let's take this monthly chart and go down a time frame. So I'm just going to change to a weekly chart. So now we have every candlestick representing an entire week of action. And I want to focus in on the most recent move here. So there's been all this big sideways range for months, but I really want to focus in on the move since last fall, so about a year ago. So you can see that with that action we talked about, that 168.19 and stabilizing, we're starting to see a bounce higher. There is a gap so far this week, meaning price has opened above the high from last week. And we're on our way higher. Now, there is a level that jumps out to me right away as a potential price ceiling. And that's right here at 174.93. This is what's called an old bottom, all right? And Gann, W.D. Gann, whose works I have followed for the past 20 plus years, he talks about the importance of old support and resistance, actual traded price, becoming new resistance and support. Now, how you actually trade if the market gets there and what to do with that, I detail in my Gann trading pattern system. So I break up my education into these different layers and slices so you can come in and tackle one at a time. For example, momentum, in this case, Gann patterns, or it could be forecasting and more. Okay, now let's look at what's going on with this weekly chart before we go to a daily. So another thing I've noticed here is that we actually have had a few drives down. So a drive is a directional price move. And it looks like we have come down 3 major times since this May high, and we are recovering. So that means there's still room potentially to come down once more while beneath the most recent weekly lower high at 181.12. But that's not necessarily guaranteed, meaning this low that we see in gold could be it for several months. Too early to tell, but there's potential. So let's get to the daily chart to get a little bit more refined with the price action. All right. So now I'm going to stay focused on those moves, the candlesticks, and that last drive lower on the weekly. So again, to remind you here, we have now gone from a weekly to a daily, so we have many more candles, but it still represents the same action. Okay, drive lower here, and the drive lower here. Now this drive lower looks like it's breaking up into a few parts. And currently it looks like we are in the recovery phase after a second move down, which gives me even more reason to believe that soon, might take a few days, but that there is still room for GLD to come back and try to get back into this 168 area. The other reason I think that there's going to be more of a return back to 168 is because the RSI power zones indicator, as you can see, has been living between these red zones for some time since that May peak. So that domination by the red zones is still in play. All right, so let's look at what we can strategize here based on the current action. If you're not already long or you didn't take advantage of this long move, you might still be able to on intraday moves. Just be aware that there's resistance up ahead at 174.93 most immediately. After that is at 176.36, which is also an old bottom, just on a smaller set of drives. And the 181.12 high in combination with this high right here at 180.66. They're both really close together, creates a price resistance zone. On the flip side, if prices do come into this 174 area and potentially turn lower, there's now an entire area here, this gap that's formed that provides support. And so the low of that gap is 170.23. And that would have to be reclaimed by bears before revisiting 168.19. Excuse me, I'm going to stop right there because allergies are just not letting me talk very well right now. But hopefully you get some cool insights into how you can look at multi-time frames on GLD, break that down to get support and resistance levels on each time frame. And you can even take this to the intraday if that's where your trading leads you. But for me right now, observing this recovery, it looks great, but keep an eye on this resistance zone up ahead. Catch you on the inside.